world of fintech is evolving constantly, and we at Fintech Diary try to map these trends for you. Hello and welcome to Fintech Diary. My name is Amal Dete. At Fintech Diary, we interview the fintechs and the fintech experts. Every week, every Thursday, we run a special show of the fintech founder or a CEO or a expert who's in the fintech space. But this is not a general episode. This is a special episode where we have brought together change makers, or we must say the experts from the fintech space. And we are going to talk about most trending and the burning topic of today, which is Paytm or Paytm crisis. As all of us know that after RBI's direction specifically about Paytm and on 31st of January, which asks them to almost wrap up most of their businesses, and we do not know what will happen after 29th of February. Everybody wants to know what is the trigger, what way the Paytm will go ahead, whether the Paytm will survive or not, and what is it that is happening in the fintech ecosystem. So we at etbfsi.com decided to have a special episode of Fintech Diary dedicatedly talking about the Paytm. And friends, I have four important speakers from the whole fintech ecosystem and the BFSI ecosystem whom I think can share the meaningful perspective here, if not the direct answers in terms of what can happen and what will happen. So allow me to introduce them to you. My first speaker is, Suthuratnam Ravi. He's a former chairman of BSE and also board of leading banks and the companies. Ravi has been appointed by the government of India and RBI on technical experts committee of few banks. He has been the veteran in the industry. Ravi, glad to have you on the show.
Thank you so much for having me here.
Thank you. Thank you, Ravi. My next speaker is Abhishant Pant. Abhishant is again a very well-known name in the industry. He has been doing digital yatras, traveling from east to west and south to north, and connecting a lot of fintechs. And he's the founder of the Fintech Meetup. Abhishant, glad to have you.
Thanks, Amol.
To get a legal perspective, I have Aprajita Srivastav, who is the partner of product and fintech space for the Ikigai Law. She has been doing meaningful work in the fintech space, and I'm expecting a legal perspective specifically on a Paytm issue from her. Aprajita, glad to have you.
Thanks, more glad to be here.
And my next speaker is Mr. Sanjay Swami, again, a very, very interesting name in the fintech ecosystem. He has been giving his recommendations to a lot of think tanks in the payment space and the fintech space. He has been an investor. He's supporting a lot of bodies in terms of crafting policies for the fintechs. And again, a veteran name from Bangalore, working in a fintech space. Sanjay, glad to have you.
Thanks, everyone. Good to be on the show.
Thank you. Sanjay is a managing partner and co-founder of Prime VP. So, thanks for being part of this show. And friends, those who are watching this show, whether you're watching it on etbfsi.com, LinkedIn, Facebook, or YouTube, if you have any questions, do share your questions. I will try my best to take these questions with the speakers that I have. So let me start by asking a first question to you, Ravi sir. In fact, today itself, there was a RBI press conference after the monetary policy. And RBI clearly said that this is a supervisory, decision of the RBI. But still, we do not know what exactly is the trigger. The compliance issues over the KYC or the AML issues, lot of news there in the market. When you read this story, what is your analysis? What is you think is the major trigger? Because this is the most drastic step that the regulator has taken on a regulated entity.
So my first reaction to this is that, first of all, this is non-compliance. And RBI or any regulator today is absolutely averse to non-compliance. And as we understand from the sources, this notices have been going to Paytm over a period of 2 years. And there have been serious non-compliances in terms of KYC, which is in public domain. But the part that is more important is to understand that 1/3 of the deposits or 1/3 of the total gateway do not have in the wallet do not have KYC, and that is about 1,000 odd crores, 1,200 crores approximately, which is a big number. If you look at it, it's a very big number, and I think this was the major trigger point for the supervisory advice that was given to Paytm. Uh, if you look at it historically, so whenever the supervisor or the regulator has come in, it is either on account of capital adequacy or some other factors. But here, or not raising capital, we can see in PMC Bank, or when there is a non-compliance of other sorts. But this is the very first time where steps, very strong steps for the KYC, for non-compliance of KYC. There's a lot of with data privacy and with other acts coming in. It is very important to adhere to the KYC norms. The percentage which of non-compliance is very high, and that is the reason this trigger has happened. This is the first and foremost reason, and enough time was given, as we understand, for nearly the last year had this notice was given, and subsequently, because of the non-compliance, such step was taken. This is my first reaction to the whole Paytm sort of advisory which happened.
Sure. Noted your points, Ravi sir. Aparajita, let me come straight to you and take some learn more from those 5 bullet points which RBI has mentioned in the half-page document which they released on 31st of January. Generally, RBI comes with a long, at least 2 to 3 pages of directions, whether you look at the past and give a full direction in terms of what needs to be done. Sometimes they also overtake the board and appoint the director from the RBI itself. Such thing has not happened with Paytm. They have given only four Paytm payment bank, obviously. The four, just 5 directions and do this, do this, do this. That's it. Which simply means that perhaps they are in the mood to, in fact, even revoke the license. That's what is the market understanding. What could you tell us? What is there in the between the lines? Is that what RBI wants?
Yeah, I think important to remember that Paytm Payments Bank has been receiving notices from the RBI since the past couple of years. It was fined for KYC violations. It was fined, data sharing, etc., IT infrastructure. The RBI does not act on women fancy. There is a procedure that the regulator follows. This is agnostic of Paytm Payments Banks. For any regulated entity, if there is a supervisory or compliance concern, first, the RBI will try to detect it in its reporting mechanism. RBI will issue a show cause notice. Hey, look, I think that there is some lacuna in, say, data privacy, KYC, AML, anything else that the central bank feels is not adhering to the standards that it prescribes. It will give a show cause notice. It will give an opportunity for the target to be heard. It will also give the opportunity for the target to kind of rectify the errors. Paytm Payments Bank had been receiving these. So while this order by the RBI or this letter by the RBI to the Payments Bank is fairly cryptic, we can glean from the previous kind of action by the RBI that it was related to data privacy, it was related to KYC non-compliance, and a third aspect that is emerging, and even if you see from the parent company OCL's prospectus, is that the proximity of the codependency between OCL, which is the parent company, and or the associate company, and Paytm Payments Bank is something that the RBI is uncomfortable with. So if I were to really read between the line, I think that is another trigger point. Apart from just plain non-compliance, it's also proximity, codependency with an entity which actually is not licensed by the RBI.
Okay. Now let me take Sanjay's view here before I get into Abhishant. So Sanjay, you have been advising fintechs. You have been dealing with fintechs and the whole startup ecosystem. What is the impact of this particular decision that you see on the whole fintech ecosystem?
Yeah. So first of all, I think what has happened now, is certainly unfortunate, but it's not something that I have any of the details on. So I'll stay away from speculating. But I would assume that the processes that were mentioned by the prior speakers have been followed by the regulator, and this is sort of, unfortunately, like a last effort to address the situation. But look, I think fintechs in general, in India in particular, are and I was at the Bharat FinTech Festival yesterday, where you and I met also briefly. They are
Great.
very aware of their responsibilities, and no fintech actually starts out saying, look, forget the regulations, I'm going to work with the regulations, right? I'm going to launch my product. Almost everyone, especially in India, anyone who has started out in the last few years, have understood the significance and the importance of regulations. And certainly in the investor community, there is no support for any sort of cavalier mindset, right? It is unfortunate, however, that for early movers, sometimes, the rules have not been set and the regulations have not been set, and it is, in some ways, these are the people that push the boundaries. And then afterwards, when the rules are defined and set, uh, it's important then to get back in line and start following the rules, right? And that might be where we might have a little bit of a challenge here. But I think for most of the younger fintechs, actually, it's very clear that you have to stay in line from the beginning. I personally, the fintechs that we work with, we have always taken a stance that this is not a business with any gray area. Compliance wise, it's either white, else it's black. If it's not white, it's black, is always my philosophy. And I think that's what startups need to be doing and focusing on. Fintech, whether it's fintechs or otherwise, compliance, is how you run your business, regardless of the industry. But in financial services specifically, there is a very, in fact, in some ways, it's easier in financial services because everything is explicitly stated, as long as one follows the guidelines. From a regulator perspective, I think RBI has always been one of the more progressive regulators in trying to bring out. And even today, we saw, let's move away from OTPs to other forms of more modern forms of authentication. So I think broadly, I've been an entrepreneur. I worked with the Aadhaar team on, UID early in the very early days, and subsequently as an investor. The direction has always been towards systematic inclusive growth, and I think that's been the primary goal of the regulator, while protecting the customer, whether the customer happens to be a consumer or an SME. So I don't really think there are too many sort of inconsistencies in the regulator's approach. It has progressively been moving the industry forward, and hopefully all the fintechs that are watching this will take both comfort from the fact that it's not sort of a ad hoc behavior from the regulator, and more importantly, that this has to be very seriously adhered to. But if you stay within the lanes and if you are following the guidelines to the T, I think there's a lot of opportunities still ahead.
Yeah, sure, Sanjay. Avishant, you have been talking to small, medium, large, so many fintechs that I don't think anyone else will have the exposure to. Uh, Sanjay said that this is a message that the regulator is giving, that you have to adhere to the norms. So, is this the message that now the fintechs need to upgrade from their casual attire of t-shirt and jeans to a formal attire of, tailor-made shirts and a formal, maybe a trouser? कि बस अब बंद करो ये. If you want me to be very progressive, you have to follow certain rules. Is this the clear message that the governor is giving to the fintechs now?
Okay, so uh, I'll possibly put it this way that I think, at least from the way I see it, I see this as a bit disproportionately heavy decision from a Paytm point of view versus any other instance that the regulator has taken. That being said, and I'll illustrate why I think so. But that being said, I'm in cognizance and in conformity with what Sanjay and other speakers have said from the point of view of regulatory compliance and the sanctity of maintaining that. And I'll say that why I think that the Paytm piece that happened is a bit of an exaggeration, and there are enough and more instances of even worse pieces than this. I'll just take that one example, and then I'll specifically come to what you asked, Amol. Uh, just few months back, not a few months back, around almost a year plus back, early part of January, February, there's a report that came out in Al Jazeera about a bank, a PSU, which essentially opened left, right, and center the wallet and accounts for people from branch, and the people who were pushed, cajoled, and number of things happened. The scale of that, if you look at it purely from a Paytm comparison point of view, that was, if Paytm is X, that was 5X. Despite of the scale at which it happened, what did the regulator say in that instance? The regulator said, अच्छा ऐसा करो तुम अपनी ऐप पे ना अभी लोगों को ऑनबोर्ड मत करो. If the non-compliance on account, on wallet, and essentially onboarding as a process was blatantly misused left, right, and center from across the length and breadth of the nation, and that report illustrated like that like anything. If that happened, and if that happened so blatantly, and it came out in public, people had to resign, move out, and all of that happened, and despite of the fact, the best thing that could happen, at least from a public eye point of view, and at least from the point of view of what came out, was to say कि अभी ऐप पे ना onboarding मत करो. In that instance, the regulator did not say to that bank stating कि boss बंद करो, don't onboard any new client or anything of that till the time you clear up all the mess that you have done, and the mess that you have done has happened across the length and breadth of the nation. So in comparison to that screw up that was done by that bank versus what has happened in Paytm is possibly 1/5. And in that case, in that bank's case, some you can lend to that client, you can do 10 other things which you cannot do purely from a payments bank license point of view or payments operator standpoint. You cannot do anything of that nature. And still, Paytm, in my mind, in this just one example, in this one example, if you compare peer to peer, you will realize that Paytm was penalized much, much, much harsher than what this bank got penalized with as such. So I don't think that the response from the regulator point of view was proportionate when it came down to Paytm specifically. So that's my point of view. Now coming specifically to what you asked and what you stated from a startup point of view, I think from a fintech startup point of view, at least at our end, we have been stating that for at least last 2 to 3 odd years, is this very clearly that one, if you find anything from a regulatory gray area and an arbitrage point of view, and if you try to play with that, you're screwed for life. Don't do that. Be very clear, either it is black or white, and if it is white only, then venture into it. Otherwise, don't venture into it. In my mind, the regulatory direction clearly is that you are either of the three. You are either an RE. If you are in the domain in which you are supposed to be an RE, then please apply for a license. We have license for PAPG, for NBFC-A, for NBFC, for prepaid and everything else. Please apply for that, get that, and do your business. Or you are a TSP, which means you are a pure tech player enabling financial institutions and other institutions, and go ahead and do that from a pure tech play point of view and be a TSP. Clearly, don't try to play with data in that scheme of thoughts. And the final piece is this, that you are distributor of financial products, and that distribution of financial products has existed since the time in 1991 Andromeda came into existence as a DSC. So that has been in existence for the very long period of time. If play in these and play in clear domains and clear boundaries of yours, I think there is a appreciation on that. But is it something which has been drilled down fully? The answer possibly is no, and there's a lot more needs to be done from an education and otherwise perspective.
Sure. Very clear and realistic thoughts, Abhishant. Noted your points. In fact, just to submit here, that very recently, the RBI ED also made one interesting point that a lot of fintechs comes to us and they look for a consultancy. We are not in a consultancy, but a regulatory business. And, they should be very clear about what they are doing, because it's not just about if A is not working, they will shift to B, and if B is not working, they will shift to C. So that one part is also happening. But let me go back to, Mr. Ravi sir. So let me, bring you here again. So Abhishant somehow mentioned a part of a bank, perhaps which did not face the harsh action of RBI, which the Paytm has faced. Earlier, you wrote a very interesting article about the fintechs, and there has to be an interesting regulations that you were pitching for, progressive regulations and everything. So, so do you think that the regulations which are there for the fintechs are really, really progressive? Because You are thinking about the dash of futuristic thinking for the fintech regulations, because we have to also understand that though these are the regulated entities, they are still very, very new. They are not as traditional and historical as the other banks and the NBFCs, and perhaps they will take some time to adopt the regulations. Obviously, 2 years window is not a small time that we all copy. But what is your whole view on the progressive regulations? Are the RBI's regulations really progressive when it comes to the fintechs?
So my view is very clear. RBI is very clear on its regulation. They want uh, all the players in the fintech space to actually adhere to the compliance, and the KYC is a very important compliance if you look at it. Especially, let us consider the fact that Paytm was had a market share of 67% of the total wallet space. So it is a very systemically important from that point of view that it followed the regulations. And I would say that first and foremost, it is important with this transgression that has happened through the annual financial inspection which RBI did, and then it gave a show cause notice. They gave an opportunity, and then they ended up doing this. So I would think that this step that RBI took was very just. Now, taking the point whether there is this supervisory rules and regulations that are coming in, are they important and are they progressive? Yes, they are. Because see what is happening in the ecosystem of the banks. Why India has seen less failures of banks? It's primarily because RBI has been proactive. Similarly, because there is a lot of growth in the fintech space, RBI and all the regulators feel that there should be strong regulations to monitor them, because after all the liability and the responsibility of any failure falls on to the regulator. We must also understand that there are a lot of investors chasing the fintech companies, and a lot of people and stakeholders are there, and there's that stakeholders must be protected. And that is why I feel that the regulations that are coming in are progressive. It is the need of the hour. It is not what it was 5 years ago, because 5 years our whole landscape was different. Now with the large growth in fintech, mushroom growth rather I would say, of the fintech industry, where we are seeing a lot of fintech companies, it is important to put regulations. And I think right from looking at the IT infrastructure to the KYC to all other norms, to the digital platform, which we saw a guideline 2 years ago, 1.5 years ago on the digital platform. So all this has been taken in because RBI feels that there can be a misuse, potential misuse, and that is the primary reason the supervisor has put in a lot of regulations, which is the need of the hour. And if you look at the West, also there have been some failures, and
Great.
and these failures have to be eradicated, and that is the reason RBI has come out with these guidelines, and it is apt to do that.
Okay, sure, sure. So Aparajita, let me come back to you and learn more from you specifically on the legal perspective, or maybe the future roadmap. Uh, so the question that I have, Aparajita, for you specifically now is, though the Paytm has already clarified that they may not be interested in challenging the order or the direction of RBI, what is the legal remedy that you see specifically for Paytm Payment Bank?
Yeah, so that's an interesting question, right? Where does a company or a regulated entity like a bank, a payment system provider go if there is an adverse action by the RBI?
Right.
Unfortunately, there is no RBI appellate authority. There is no like a SEBI has a appellate authority. There is no appellate authority to the RBI.
Yes.
Where there is an adverse action, you can ask the RBI itself to review the action, which I'm sure Paytm Payments Bank has already done. But I mean, that's the RBI reviewing its own order. Um, if there is any kind of revocation of license, you could technically approach the central government, but I mean, the climate here is not one supportive of that. FM has already said It's a monetary policy, it's a supervisory body. They are subject matter. I also want to speak to whether you can go to court or not. Of course, an RBI decision can be taken to court. There is no court, no regulations above hand. However, if you see precedent of companies taking the RBI to court, the court itself is saying, look here, this is a subject matter expert. They understand monetary policy much better than we do. Their supervisory powers, if they are opened up by the court for their own decisioning, which may not have the expertise that the regulator has, it's a can of worms. We will defer to the RBI where it comes to these kind of administrative supervisory decisions. There are very rare instances in which the court will say, well, has the regulator been proportionate in its use of its powers? Has there been adequate application of mind by a regulator, etc.? These are the finer points of law, the principal points of law at which the court will open up a decision by a regulator. Otherwise, regulators are considered to be subject matter experts in their own domain. Neither the court nor the government is going to sit as as an arbiter of whether what they did is correct. I'll again stress that the regulator does not take an action just as a women fancy. There is a process, there is an opportunity to be heard, there's an opportunity to correct your ways. It is also, and I agree with Sanjay on this one, a little speculative at this point in time to know exactly what transpired between Paytm Payments Bank and the regulator. From past action, we know that there was non-compliances. The RBI did take softer actions. They did take actions like saying, okay, don't onboard new clients. There was a big fine. There was a fine of upward of 5 CR on the payments bank as well. There were softer actions. There were external auditors appointed. After a couple of years, this extreme action has been taken. Whether it's Paytm Payments Bank or whether it's any other regulated entity, the law governing the RBI requires the RBI to be measured, to give the target of investigation the opportunity to be heard and to defend itself. So I think just in terms of what can Paytm do now, um, in terms of appealing what the RBI's order is, it can do little. It can go to court, but like I said, that's a fractured right. Um,
Great.
it will, unfortunately, I think the way out of this hole for Paytm would be a change in business strategy, where instead of relying on Paytm Payments Bank license to do, house your sponsor bank UPI business, etc., it'll have to go to another bank. And as Abhishek pointed out, you then become a wrapper on top of that bank's
Right.
kind of
Right.
regulated function. You can become a technology provider, you can become
Right.
a distributor, etc. But you can't ride off your own license.
Okay, sure. There's one more point, but let me come back to you and bring Sanjay here first now. So Sanjay, we discussed the impact, but I want you to highlight more specifically on the investment part. Generally, if anything, any regulatory action happens on any entity, there are repercussions, specifically on the investment front. We always go through the FII, FDI, IPO. These are always the sensitive issues. So in this particular issue as well, because generally the investments are quite sensitive. Any which way there is a funding winter, the investments are not coming very aggressively, specifically into fintech space. What is it that you're learning from the investors? Do you think that this particular issue will have some repercussions on investments as well? Do you think that the VCs, the angel investors, will go slow and maybe expect fintechs to follow, be very, very realistic in terms of compliance and all other aspects?
So, as I was saying, right, I think over the last 5 years, it's been very clear that compliance is going to be absolutely essential. And to add to what Mr. Ravi was saying earlier, um, look, we are in a very extraordinary situation in India with our digital public infrastructure, right? I happen to be partly involved with Aadhaar and India Stack through the early days. Really, the cost of KYC is near zero these days, right? I
Yes.
mean, yes, there is work involved in it, but I don't see any fintech today saying, oh my God, KYC is such a headache, right? In fact, if anything, it is getting better. Now, yes, because there is video KYC, there is CKYC, there is, in addition to all of the eKYC, right? So, Yes, for a mobile wallet type of a business case where the unit economics perhaps are not as exciting and the cost of KYC can be quite material. But even there, RBI has allowed for an OTP based eKYC for up to say 10,000 rupees a month or something like that, right?
Hmm.
So,
Hmm.
broadly speaking, I think if I was starting a company today, I would have to, and I would very happily bake in the cost of KYC as a part of my as a part of doing business, right? So certainly, yes, I think someone like a Paytm has had to sort of do the transition from a paper KYC to almost a no KYC to a very lightweight mobile number based KYC to an eKYC to a biometric eKYC to this. And, the early pioneers always face these sort of choppy waters that they have to deal
Hmm.
with. But there is really no excuse today for any startup to say that, KYC is a reason why I won't be able to build a business, right? And
Hmm.
I think the profit pools in fintech and financial services in general are large enough where factoring in the cost of KYC and re-KYC, as the case might be, in India, it's not a material cost. That is the reality of it. With the penetration of smartphones, the availability of Aadhaar for everybody in the country,
Right.
right? There is no excuse anymore for a new startup to say that I can't do it. So I don't think there is any concern. And from an investor ecosystem perspective, I think we all factor that this has to be done and has to be done right. None of us are trying to build companies on shortcuts. We're all trying to build companies that are going to be large, lasting companies here.
Hmm.
And if they cannot find a viable business
Hmm.
where the cost of operations and compliance is something that they have to factor in and execute on. Now, there may be a competence issue, there may be a use case, a business model issue where they can't sustain themselves. In that case, those companies will not make it.
Yeah.
But taking shortcuts is just not what we are banking on to build companies, right, in the entire ecosystem. Now, to
Hmm.
answer your question on the funding winter, there are two ways of looking at it, right? If
Hmm.
people panic a little bit and say, "Oh, well, there's a regulator that is acting ad hoc," then what
Hmm.
you're saying is right. I think the other way of looking at it is if this, and obviously we don't know the details here, but if the
Right.
regulator has gone through the process that we believe they have, then actually I think it protects the customer, it protects the consumer, it protects the businesses that are being well
Hmm.
run. So, I have deep respect for what Vijay and Paytm have accomplished over the years,
Right.
the scale, and it's really extraordinary to see what they've accomplished. I don't think any investor, whether it's early stage or late stage, is concerned about the regulators' decisions here because we assume that it has been done with due process. And if anything, it will reward companies that are being well run, and hopefully they will also get an opportunity at Paytm to get back on track, which they intend to.
Hmm. Okay, sure, sure, Sanjay. So Abhishant, if we speak about the future, given the impact of Paytm, are the fintechs looking at as an opportunity because there are 4 crore merchants, 30-40 crore customers, so it's a big opportunity for the whole BFSI ecosystem, whether it's banks or the fintechs, or it's a scary factor for them because they do not know whether the merchants migration is the right option because you don't know whether the KYC is right with that merchant, and that would be a challenge going ahead. So what is that you're listening from the fintechs right now?
So, frankly speaking, so let us look at who are the parties involved. One, you have a customer, people like you and me who use Paytm, and then you have a merchant who receives money from us, and also possibly is also a consumer on the other side of the story. That's who we have as participants in the journey. Now,
Hmm.
from a merchant point of view, since realizing they missed the bus on UPI front, practically all QR that you see on ground at this point of time by Paytm or anyone else is a UPI QR, which essentially means that the money will get credited into a current account or a savings account in case of a proprietorship and things of that nature. So money credit in any case for a merchant happens in their current or a savings account. Now,
Hmm.
in those cases wherein the merchant money was getting credited in Paytm payments bank account, I will frankly speaking, I will find it very hard to believe that there were a lot of merchants who had a Paytm payments bank savings or a current account behind which they were receiving money. I don't
Correct.
think so. बहुत छोटे होंगे, मतलब बहुत ही थोड़े होंगे, मतलब I don't see a reason. So most often than not, and the reason why I believe so is this, and I'm not sure if you have ever done that, but I have
Hmm.
actually walked with a Paytm, PhonePe, and a Amazon Pay guy on road for a day to see how they acquire customers.
Hmm.
In almost practically all cases, there is no solicitation which is done. These
Hmm.
are 12वीं पास बंदे who cannot do solicitation का business of acquiring customer relationship. So their ability to help you get acquired and then open your current or a savings account is practically non-existent. So basically fundamentally ये बोलते हैं जाकर के कि बॉस मैं आया हूं, आपको यूपीआई से पैसा मिलेगा, आपके अकाउंट में आ जाएगा, आप अपना अकाउंट बता देना. So which means they are not responsible for performing KYC because the money is moving from one KYC account to another KYC account,
Correct.
and QR pasted by Paytm is just a pipe via which money is flowing. As simple as that. So merchants are going to get impacted. I don't think that merchant will possibly get impacted in this scheme of thoughts. Very, very, very few merchants who have opted for possibly a Paytm Payments Bank account may have some impact. Even in those cases, it is practically a simple step required from a merchant point of view to essentially enable our other bank account and get the money into their bank account. That's simple. Now, as far as consumers are concerned who are using Paytm to pay, frankly speaking, शर्मा जी ने खुद ने भी he has promoted hugely कि बॉस पेटीएम से यूपीआई यूज करके पे करो. So he also realized the fact that boss that the stepwise journey of moving money from personal account to a wallet account and then making a payment, उस journey का time खत्म हो चुका है. Largely the journey which consumer needs to undertake is a journey which is from the consumer account, whether it is on Paytm or somewhere else, and using that to make a payment using UPI. So in that sense, the customer who is also coming in is using Paytm as a pass-through and essentially using that to scan, pay, and money may get debited from his ICICI, HDFC, Access, or some other account, and it can also be a Paytm Payments Bank account. And in that case, again, because of the VPA concept and the default and the library setup point of NPCI, moving the account from Paytm Payment Bank account to any other account is a piece of cake as from a process and a flow point of view. So do these pieces represent opportunity from a fintech point of view, existing fintech point of view? Practically, in my mind, the answer is no, because nobody at this point of time realizing that Paytm is in challenge is going to go and start acquiring merchant relationships, because it will not, frankly, I'm not sure if you know, देश में अभी 31 करोड़ क्यूआर है. हम वी से दैट मर्चेंट 6 करोड़ है, वी हैव 31 करोड़ क्यूआर व्हिच मींस प्रैक्टिकली एवरी मर्चेंट हैज गॉट सम 5 ऑड क्यूआर. तो एक और मर्चेंट एक्वायरिंग ऑर्गेनाइजेशन बने जो जाकर के मर्चेंट एक्वायर करे स्पेसिफिकली जहां पर पेटीएम है, is in my mind living in fool's paradise. And other piece is, if you are looking at it from a savings account point of view or a relationship point of view, in that scheme of thoughts, customer can move from his existing account, which is possibly a savings account of Paytm, to any other account, and they essentially can go for that. People who may get some benefit from here are PhonePe, Google Pay, and others, because it's already a large boys group, big boys group. It is not a small startup group. So I don't think startup gets benefited in this case any which way. The only piece wherein there will be a significant impact and they are trying to see how they can mitigate that is on the FASTag side of the story, because I have a FASTag which is out there, which is linked with my Paytm current account, Paytm savings account, and so on and so forth, and all of that. There, because it was acquired by Paytm, because it was essentially a relationship with Paytm, and because the account linked associated with that was with Paytm, so those Paytm FASTag is where NPCI and others are trying to see what they can do to transition these consumers for the time being, because that's where the biggest hit is going to be. And that is where somewhere those who are in the business of acquiring FASTag relationships will potentially have something, some meat that they can expect from there. I don't think fintechs otherwise have much of opportunity as such, except for some relationship which PhonePe and Google Pay can acquire.
Sure, Sanjay, please go ahead. I think Sanjay had
Well,
a
it's
point.
one other small but important area could be the payment gateway side, where, because for the offline merchants, right, it's just having another QR code And even if you don't have one, you can download one of these UPI apps and just print out your own QR code and you're done, right? Because you already, it just points to a bank account. But for payment gateway, there's actually API based integration into the Paytm payment gateway service. And if you're only working with them and you don't have someone else like a Razorpay or a CC Avenue or a Cash Free, then there will be some challenges and work involved there, right? So that is probably the most tricky one. But most of those are probably technology savvy companies. It's a handful of large companies actually. So I would fully expect that there will be a little bit of opportunity. But in general, in India, we've always had this culture right from the early days. I've seen with payments. Or when you go to a merchant store, also there will be 5 POS terminals there, right? And they would
Yes,
always be having
yes.
this honest office mindset. So generally, we have sort of inherently built redundancy into everything we do from a business perspective, and in situations like this, it actually will, ironically, be one of the reasons why there will be very little disruption to business.
Right.
Right. I'm sure there will be some corner cases that we probably cannot fathom here or imagine here, and there will be some choppiness for a few days, maybe, or perhaps a week or two. But the system will figure itself out very fast here in India.
Yeah, I'm sure. So Ravi sir, let me come back to you and with your experience because you have been on the board of several banks. You have advised a lot of startups, fintechs. What is the future that you see for Paytm after the harsh order of RBI? Do you see Paytm coming back, or what is the alternative that Paytm has according to you?
So the first and foremost step, Paytm, if I were the management of Paytm, I would give a roadmap of compliance to RBI. Having failed so far, that is why these notices have come and this harsh step has been taken. But if I were the management of Paytm, I would come out with a very concrete plan. See, if you look at the history also of all the non-compliances and issues, including the past experiences, there has been always an opportunity that has been given. So here, Paytm management can come with a very clear roadmap, and they can say, okay, I can do all this in an incremental basis and try to comply with it. So that is the first and foremost step Paytm should be doing. They should represent back again to RBI and bridge the gap as much as it is possible so that they are in compliance. Sometimes what happens, you cannot do compliance overnight. So I think they should take some time, understand RBI's concern, and should address it with a clear dialogue with RBI and with a very well laid out roadmap which they can submit to RBI. And that is what Paytm management should be doing. About the future of Paytm, well, if they start complying and if they take measures for complying and they bring in the right optics and try to look at how they are going to implement this roadmap, they may survive it. And it's also important from Paytm's viewpoint that the related party transactions, which some part of the press has covered about, should also be addressed. This 197 transactions with this company, what is the transaction, how are they addressing the shareholders issue? I think that is another way which Paytm should come out clear and should address it, because there is some part of the press which is talking about governance there also. Why did not the board act on it? What was the board, what steps did the board and the management took in this thing? Why Mr. Sharma was not the full-time chairman of this institution? All those questions. So
Right.
those questions have to be answered. And I think the confidence building exercise has to be done by Paytm if they have to survive. The other option for them is to get a strong shareholder along with them who can actually build the business together if they are compatible in any form. So do that. So these are my two ways. One, survive on your own strength with a clarity, with a clear roadmap, good governance, change a lot of things, bring a good team, and try to do the KYC and show incremental progress in what we are doing so that the confidence is restored. Otherwise, get into a strong player who can come along with you as a good stakeholder and also come forward to give a complete proposal for rehabilitation in many ways. The third point is that the biggest challenge for them is to eradicate and remove all the related party transaction, which also is reported, which also does not give good optics as far as this bank is concerned, this fintech is concerned. So I think that has also to be addressed. So I think these are the three ways which we can go. It's outright sale of Paytm will not happen. That I'm very confident, because there will be an opportunity given if they handle it well. That's my take.
No, sure, sure. I think that was really, really meaningful. Aparajita, I also wanted to ask you specifically on the compliance side. As see, there is a major challenge. The fintech or startups that largely focus on the innovation first, and when they become a regulated entity, it's a nightmare for them to go into the compliance zone. On a different side, the compliance cost has also gone up. I'm sure. I mean, your fees and everything should be absolutely fine, no doubt about it. But in general, the compliance cost, every CFO and the management has been talking about it, that the compliance cost has gone up. So one, what is the challenge that you see for the fintechs, not just Paytm? I mean, one of the largest company, Paytm, which could not comply with the compliance measures, where another fintechs perhaps could not even spend on the compliance. At least Paytm had a CFO and the compliance team. There are many fintechs which don't even have that, right? So how do you see this mismatch, and whether the compliance is itself a big issue for fintech companies? Because one, they come from innovation background. Second, they don't have enough money. So how should they, treat all these things?
So I think the answer to that is that fin comes before tech, right? It's a financial product. When you're in the business of safekeeping, moving, or lending money, um, there is no move fast and break things. The cost of compliance, the cost of having hygiene in your practices, and not just being cute around the regulations or working off some gap in the regulations, but really understanding what is the spirit, right? You have to protect the customer, you have to act in the interest of the customer, you have to make sure that your license is not being used as a conduit unwillingly. You're not using your license in a way that either money laundering or any other shady activity is happening. This is both on the issuance side, where you are building kind of a B2C business, say a wallet business, and even where you're on the merchant acquisition side, right? The political intent and the regulatory intent is very clear that payments companies, payment aggregators, whether they're tech companies or not, they are in the business of moving, safekeeping public money. Now, if a business does not incorporate the cost of compliance at the get go, then this is not the business to be in. Even if you are an unregulated entity, even if you are a wrapper where you say, I'm a tech play, I'm just a platform, at the back end I have NBFCs and banks or other regulated entities, etc., even then there is an indirect regulation upon you. RBI regulates REs, banks, NBFCs, PPI issuers, PAPGs, entities that take direct licenses from the RBI. It then tells these entities that, look, keep your orbital entities, your distributors, your technology service providers, whoever they are, in check. Now, that check is kept through contract, but between the regulated entity and the tech service provider, whoever the platform is. But the the philosophical way in which to deal with those relationships is not that, well, the platform owns the customer and the platform can do whatever it wants because it spent the marketing dollars in acquiring the customer, and the bank or the NBFC or the RE at the back end is this commodity that can just be switched out, and you can kind of bully the RE at the back end and saying, customer is mine, I will interpret the regulation in whichever way I want to. I think that's a clear no. You do have to respect that when you are distributing a regulated entity's licensed product, their neck is on the line. So while you may not be directly regulated, if you come up with any interpretation, if you don't follow kind of the letter of the law that the regulated entity is liable for, you will be in trouble and the regulated entity will be in trouble. And I don't think that building a fintech business and saying, well, innovation trumps regulation is a viable one.
Sure. So let me move ahead and bring Sanjay once again and take your again future perspective. Sanjay, we discussed the impact on both the ecosystem and the investment front. But if we look at your learnings and maybe the road ahead, one, I mean, if you could tell us directly, indirectly, what is the roadmap for the Paytm that you see? Do you think that there are companies with big pockets which could be ready to acquire Paytm, or Paytm should maybe, sell its customers, merchants, allow others to acquire it aggressively? What is that roadmap that you see ultimately? Because the show must go on ultimately.
So I really have no comments on that, but I'll come back a little bit to Aparajita's comments here. Um, I have actually seen many a times the opposite, where the fintech has been much more strict about following regulations, and the RE partner that they've been working with has been on the wrong side of, or has been pushing the boundaries as well, right? So it kind of happens both ways here. It's not just fintechs that are cowboys trying to make something funky happen here. A lot of it, of course, depends on the origin and the roots of the founders and what industry they've come from. Many of the fintechs today are formed by bankers and who are working with technologists. And I don't think anybody here has any intention to skirt the regulation, right? I think that maybe an understanding or an interpretation. But if I may, one thing that could help a lot is, see, I think a big challenge we have in India is the regulations keep changing, literally on a daily basis, right? And there's always a circular that everybody's waiting at 4 p.m. every day to look at RBI's website and see is there some new circular that suddenly came up that enforces us to change what we were doing. So I've been thinking about this a lot for the last few weeks, and I was just wondering, it would be great if we had some, let's say, 6 monthly period where there is some stability in the regulation, right? So rather than, yes, entities which are not following them could be hauled up at any point in time, but the new circulars that keep coming out, if they were to come, let's say, on 31st of March and 30th of September, I think people could plan and work, with those regulations. And there's rarely something that changes so dramatically that, it needs to be changed immediately. So I was hoping that, people would think about, the cadence with which such corrections are or such changes are made, so that because it takes time to build product, it takes time to change business processes, and that could be done in the more, stable regulatory regime at a 6 monthly sort of cadence as opposed to a anytime sort of a cadence. So that was just one thought I had. To your other question about the future for Paytm, look, it's a brand that has become synonymous with payments in India. It's a brand that has been, that is endearing to several users. I would certainly hope that if you were to take a 6 to 18 month type of a horizon, that they should be able to bounce back. I think in the short run, there will be some, medicine is unfortunately often bitter but needed, and corrective procedures like this will need to take some time for people to recover from it. But hopefully the impact is short term, and over the long term, we look back and say, wow, it was great to see somebody being able to recover from such a severe thing as well, and being able to show the way of how to be more compliant with the regulations. um, yeah, there will be certainly people who will opportunistically think about should we do something in the short run. But if you take a long term view, I think I would hope that they'll find a way to be okay.
Hmm. Sure, quite meaningful one, Sanjay. And in fact, I somehow agree with you that the regulations, should not come every day in the evening, so that even we can wrap up our work and not check the RBI website every day before we log off and take some news break also. But thanks for Sanjay. That was really meaningful. Abhishant, let me bring you back and take your future perspective. Do you see Paytm bouncing back after this? If not, or your overall view in terms of the future, what do you see the future of Paytm? Do you see some other companies are ready to acquire some stake into the Paytm? Do you see other companies are ready to just acquire the merchants, and if given an opportunity, they are even acquire the whole uh, whatever the stake is available as well? How do you see the future?
I the only thing which possibly I would not want to see out of everything that is out there is somebody with lot of money among AA acquiring Paytm. So that is something which will be possibly the most unfortunate part of this entire story, if at all that happens, because there is one theory which is out there from short sellers and otherwise who short sold Paytm, is also the theory that some of those who are close to the power to be, and they influenced some of these decisions, and as a result of which they will possibly swallow Paytm out at some point of time. So this is, if at all that, and again these are short seller stories, and I have no view or clue on that. That will be the most unfortunate part if at all that happens, because what Paytm look what is happening in this entire process. What is happening in this entire process is that somebody who built customer trust, got the customer in first place on payments bandwagon in India before UPI became well known to the world and everything else. Essentially, what he could do is this, that to convince a customer that you can transact using this platform anywhere, anytime, and you can transact safe, secure in that process. Now, so what essentially is happening is this, that trust which the customer had with, or continues possibly in some occasions with the base, is something which is getting eroded. So if somebody who is out there in market and wishes to come on this place, there are only two options. One is to kill customer trust in you and who you are, and then get you to that point when you can be acquired as such. इसमें मेरे को एक वो हिंदी फिल्म का डायलॉग याद आता है, सरकार मूवी आई थी अमिताभ बच्चन की, तो सरकार में एक इंस्टेंस पे जो अमिताभ बच्चन के विरोधी होते हैं, वो कहते हैं कि यार ऐसा है कि सरकार जो है ना, वो एक इंसान नहीं है, सरकार एक सोच है। अगर आपको सरकार को खत्म करना है तो आप सोच को खत्म कर दो, सरकार अपने आप खत्म हो जाएगा। So which essentially is to say that it's an idea. You finish the idea, you kill the idea, the institution will collapse on its own. So this is one of the theory which a short seller based in Hong Kong told me, that that's the theory floating around in global short seller market who are associated with this value chain. So it's an unfortunate piece which is out there, and potentially I have no clue of whether it has any tinge of pieces or not. But yes, one of the other payment bank essentially released their advertisements out of nowhere. They came out of hibernation suddenly. जैसे होता है ना, भालू 6 महीने अपना जो है खाने के बाद सो जाता है, एंड देन सडनली 6 महीने बाद खड़ा होता है. सो दैट पेमेंट बैंक केम आउट ऑफ नोवेयर एंड रिलीज्ड एड्स stating नहीं हम भी हैं, we are doing something, while they had practically zero visibility in market for last 7 years since they have received the license. So there are things which are out there as such. From a survival point of view, I'll possibly put it this way, that as founders, and Sanjay possibly is one of good examples of that, people who tried fintech when it was not called fintech in early 2000s and all of that. तो स्वामी साहब पिछले 17 साल से हैं. So I'm hopeful while looking at Sanjay that founders survive much longer than anyone can imagine. So my hope and belief is this, that Paytm will survive, will essentially comply whatever the non-compliant pieces are. इसमें कहीं किसी बड़े शायर ने लिखा था कि गिरते हैं शहसवार ही मैदान इस जंग में, वो तिफल क्या गिरे जो घुटनों के बल चले. तो मेरे ख्याल से फाउंडर सर्वाइव कर जाएंगे और कुछ ना कुछ बना लेंगे, कुछ ना कुछ. कंप्लायंस ऑब्वियसली is important piece of it, and I'm not essentially at all in any ways stating that it is not. In fact, one of the pieces which I had a chat with you at some point of time, I said कि यार पिछले 5 सालों में 4 CEO बदल दिए हैं बैंक के, which is not the good thing as such, when you are sending message to people in terms of how you are managing the organization as such. So I think there are a lot that needs to be corrected at that end as well, but I'm hopeful that it will survive.
Sure. Always with your style, Abhishanto, Shairi and the Soch. Thanks for that, in fact. And but yeah, absolutely, from RBI's Mint Street to the whole fintech world. Questions are many. Friends, I managed to take a couple of questions with the four best people who could give you the enough perspective. But there are still many questions, and I can still tell you that what is the major trigger, whether it's KYC, AML, or something else, that question still remains a question. Whether Vijay Shekhar Sharma will bounce back, we really don't know. But one thing is sure that he has to change the wheels now when the car is in full speed. Perhaps he could have done that when there were 2 years, and he should not have taken perhaps so casually or lightly, or we do not know why did he take so casually or lightly. But thank you so much for tuning into this particular episode and being part of FinTech Diary. And thank you, Aprajita, Abhishant, Sanjay, and Ravi sir for sharing really meaningful and realistic thoughts on this particular show. Thank you so much.
Thank you, everyone.
Thank you. Thank you all. Thank you. Thank you, Anil. Thank you. Bye.